protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman of the Hoffman Financial Group. New episodes come your way on Mondays and Fridays, so make sure you're subscribed wherever you get your podcasts. With that said, let's jump into the show. Now, even though the United States has experienced an unprecedented wealth boom, a recent poll suggests that surprisingly few Americans, including millionaires, feel confident about where they stand financially. Now, this may surprise some folks out there listening, but according to a new report by Hoffman Financial Engines, only 12% of Americans consider themselves wealthy. Now, here's where it gets more interesting. Despite a high net worth, just 33% of millionaires classify themselves as wealthy. And the Hoffman poll asked more than 3,000 adults over the age of 30 earlier this summer, including 1,500 affluent Americans with household assets between $500,000 and $3 million. Now, if you're scoring at home, the top 1% in America, well, that's considered to be those with $11 million or more, just for context. But Chris, what do you make of this perception, especially among millionaires, even by those who may be traditionally considered wealthy, but they're not really feeling or perhaps acting the part these days?
The problem with measuring wealth is we measure it based on the wrong number, folks. We base it on this poll that Edelman has now done, Vanguard does, everybody does, which says, how much money do you need to have in your portfolio to retire? If you were to ask a couple that has $1 million in their 401k, if they're wealthy, the answer immediately will be no. If you asked them, what would it take for you to be wealthy? They would say 2. Ask the person that has $2 million, are you wealthy? Their answer will be no. Ask them what it will take for them to be wealthy, they would say 4. It's a study, folks. That poll is true. Everybody wants to double their net worth to feel wealthy. How about this? How about feeling wealthy based on this statistic? If your employer deposited $100,000 into your checking account each year, post-tax, and we did an income study for you, and we could send you $200,000 a year, would you feel wealthy? You would have doubled your income. You could walk away from your employer. Now, I'm not saying that's the typical finding. That's a pretty egregious example. But it's about what you spend. You're wealthy if you can make more than you spend, period. If your portfolio is even growing in retirement, you are wealthy. Doesn't matter whether you have $1 in the bank. If that dollar grows to $1.10, you're growing. And you are wealthy because you're generating massive amounts of income on a highly reliable or guaranteed basis. And that's where the current model falls apart for the Gen Xers that got caught up in 401ks in the 80s. There was nothing to fall back on, folks. There's no pension. Social Security is a mess. Medicare is a mess. Everything the government touches is a mess, including forcing us into 401k plans. Sorry, Trump. Sorry, Obama. Sorry, every other president. I'm telling you, folks, the financial condition in the United States is on borrowed time. It's on borrowed money. What are we, $36 trillion in debt?
At least.
And it grows exponentially, and all the budgeting bills are raising the debt? It's not a Trump problem. It's not an Obama problem. It's not a Democrat versus Republican problem. It's a United States of America problem, folks. We are trapping everybody out there into obsessing about 401k total net worth. And we're not setting up anybody for a comfortable retirement. And that's what we fight against at Hoffman Financial Group all the time. Because people come in and they say, here's my portfolio, and it's not in any way, shape, or form built to retire on. It would be if they had pensions. It would be if they had income annuities. It would be if Social Security paid appropriate amounts, which it doesn't. But in absence of all of that, you've got to change your thinking. You've got to engage a team of professionals that can show you with your financial life outlined the way it is today. No massive changes, but if we could show you an income plan that would raise your income versus your employer paychecks, secure your assets, would you feel wealthy? My bet is yes, you would. And I see it in callers' faces when we've met with them year over year over year and put these plans together. They feel wealthier when they walk out of our meetings than they felt when they walked in. Why? Just because we're putting together the right plan for them. We're maximizing the money that they've saved and the financial life that they built. And that's a fundamental difference between an individual advisor working with an individual family one-on-one in a fiduciary capacity versus putting you in the same cookie-cutter portfolio that everybody else is in, i.e. your 401k plan.
So we're talking about this report from Edelman Financial Engines, which revealed that a smaller than expected number of Americans, including millionaires, are feeling confident about where they stand financially. And we talked about some of the reasons why they might have that shaken confidence. But I'm going to throw something out there that may play some sort of degree of devil's advocate, and I'm going to call it coincidental awareness, because maybe folks are realizing there's some tax implications on that money, and that pre-tax $1 million they have, well, that's not really $1 million because eventually you have to pay some sort of taxes on that money. So unpacking that and strategizing for that, that's awfully important.
That's a great point. And that's why using your income that you can generate in retirement post-tax is more accurate than saying if you have $1.5 million in a retirement plan, you're going to be fine. That is a total guess. It's throwing a dart at a dartboard. Why? What happens if my 401k, $1.5 million, is all tax deferred, all pre-tax tax deferred? When it comes out, I'm going to take an income headshot on taxes. What if your 401k for $1.5 million is all Roth 401k? Wow. You are now, 30% wealthier than I am? Yeah. And the numbers are the same. So Wall Street, stop lying. Stop lying to our clients. Stop lying to the community. You're lying. When you say you need $1.2 million, it's a lie. If you say you need $1.5 million, it's a lie. You're not breaking it down family by family. You're not breaking it down by how much we can get for fixed income and dividends. You haven't even looked at their Social Security number. So stop it. Stop sending people over a cliff emotionally and financially. The key to it is, if you build an income plan that sends you income after tax that far exceeds your living expenses, you will live a healthy retirement lifestyle. I know it. I live it. I've lived it for years. So we got to get away from the nonsense of how much am I quote unquote worth and start talking about and getting in the maniacal details about how much my worth can send me in income after taxes. And if that surprises you in a positive way, you're closer to retirement than you thought you were going to be. So break away from the 401k mantra. Next week, there'll be less 401k millionaires if the market falls. And if the market goes up next week, there are going to be more. It's also unrealized gains that scares people. It's, oh, wow, I've gone from $500,000 to $1 million over the past X amount of years. And there's no way to hold it, to grab it, to feel it. It's not realized. It's not real. It hasn't been taxed yet. It's out in the ether somewhere. It's very disconnected from our reality, which is you're staring at a 401k for $1 million that's never been taxed. It's all in the stock market, and you haven't sold, so you haven't realized the gains, opposed to what? Opposed to Social Security. Mm-hmm. Social Security, you can pull it up every month and say, here's exactly what I'm guaranteed to get at 62, 67, and 70. And when I say guaranteed, don't roll your eyes. I'm optimistic it will be guaranteed. Why not? Okay? But your 401k, your stock investments, they're not guaranteed. And that's where we have fallen down for our investment community and our workers in this country. We are not guaranteeing anything from their hard work. We have left them to be the financial managers financial advisors for themselves, 401k companies should be mandated to have an individual financial advisor for every one of their clients. And I don't see it. I see a very generic, yes, I'm your representative. If you have any questions, call me. But I don't see them putting together full financial plans with income reports and tax strategies. So why would you give a 401k company $500,000 or $1 million or $2 million of your hard-earned money when you're not getting any financial advisory advice on taxes, on distribution strategies, on building an income plan? Opposed to us, we will do all of that, and we'll do it all for free. So the 401k companies, in my opinion, are just fat cats. They just take all of the money, charge all the fees, and provide very little benefit other than listing a bunch of mutual funds and index funds that anybody can invest in. It's like simplest investment solutions out there. But they're not doing anything for you, folks. And when you're in your 50s, you need somebody doing something for you, building something for you, expanding your planning around income, taxation, and full financial planning and retirement planning. And 401k companies just consistently fall short of servicing their clients, in my opinion.
Well, here's the one question that should help just about anybody who's been out there listening to this conversation today. What step can we take to increase our financial confidence?
Yep. Well, let me make it the easiest step possible because I realize how everybody is extremely busy with work, with family, with their own lives. So we're not big on wasting people's time. I hold my team extremely accountable to being efficient. So start with the Portfolio X-Ray, folks. It's a free report that's about a 10 to 14 page document that we can walk you through, which basically tells you, here's how you're doing as far as growth versus targets, here's what your risk profile is, and here's how much the market may damage you if it goes down in similar fashions as past corrections. We'll show you the fee structure. We'll try to dive into your 401k and dig out all the fees for you. And other things. We'll show you how much income it currently generates, et cetera, et cetera, et cetera. But it's a very absorbable and straightforward report that we can walk you through in a half an hour, 45 minutes. You get a copy of that report for free. How much work have you done? None. We do it all. And we don't charge you for it. But it's a great starting point, and it's a huge eye-opener to see the good, the bad, and the ugly in your 401k. So call us at 404-341-6767. Again, that's 404-341-6767. Or go to unleashyourmoney.com, click on that Portfolio X-Ray button. We'll do the work. You get the benefit for free from Hoffman Financial Group.
It doesn't get much easier than that. The number again, 404-341-6767, or online at unleashyourmoney.com. That Portfolio X-Ray box is right there for you. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims-paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.